Welcome to a short update today in which we're going to watch the Bitcoin price. We're going to look at the outlook for 2023 and we're going to make sure that you get the information you need when we watch the markets and what the important charts are right now. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, and also make sure to hit the like button and follow button on Twitter and Instagram. Right now I'm into Cape Town, so that's why we have been making this update prior to the actual trip to Cape Town. Monday I'll be back with new content. Before we also continue, make sure to follow or check out our trade letter, which is on Twitter. You can find the link usually, and also in the description beneath. It's completely free, doesn't cost you anything. Also check out our premium membership, which shows you all the things you need when it comes to copy trading my portfolio and learning how to trade. When we're looking at the markets, we can definitely say that the yields and the dollar have a massive impact on the markets. So what we've got here is we've got the Bitcoin price of the past 4 years, and we've got a case of the yields here on the chart as well, which shows us a theory or a strategy that we can watch if we want to get into the market. So, for instance, in the nature of the previous bear market, we can discuss where Bitcoin was bottoming. So the yields have been rallying up quite massively. And from October 2018, which was during the actual crash of Bitcoin, that's the moment when we saw the yield starting to go off a cliff as well. In the landscape of the yields dropping down, we have seen the case of Bitcoin starting to rally in 2019. So this was definitely a good market sentiment for Bitcoin, resulting into this rally. Now the markets have been falling off a cliff with the yields overall, resulting into Bitcoin going into the bull cycle. This didn't really care because we had QE. And here we are currently topping out as well. The top took place around the November 7th, which is close to the FTX date. Started to fall down and Bitcoin starts to crawl back up again. Now if you compare it again into the DXY, which is very comparable to each other, Bitcoin is relatively weak at this point with the DXY starting off a cliff, but you can see that the bottoming of the DXY compared to the yields rallying is not suiting the climate of Bitcoin at this stage, and therefore we have seen the case of Bitcoin correcting down or being into a bear market. Same can be stated here. The Bitcoin top took place when the dollar bottomed and then the dollar started to rally up, and that's when we started to see a case of Bitcoin falling down. And once the yield started to fall, the dollar remained going sideways, and that resulted into the fake rally that we see here. The actual bull market started when the dollar started to fall off a cliff while the yields were still relatively low. And that remained until the dollar bottomed out and started to rally. That was the moment that we started to go into the bear market. This is a fake rally, so we probably would have been trending down already. What can we conclude of this entire phase here, or this entire chart? First of all, yields are falling, dollar is falling, Bitcoin is not climbing up. Bitcoin has a lot of catching up to do because intrinsic market events have been taking down the price a bit more when it comes to FTX and when it comes to Gemini and Luna. That has been crashing the markets a lot, and therefore it needs a lot of catching up to do at this case. So with this weak dollar and the weak yields, Bitcoin is still on the edge of having a pretty big breakout, especially since we are into accumulation phase, which is comparable to the price action we have seen in 2018, 2019 too. So now we also have the case of the Fed continuing the hiking policy. Markets are not pricing in the current continuation of the hikes anymore, right? The Fed has a higher rate currently that they are looking at, but once we are looking at the 2 years, the yields are not continuing to rally at this point. We might still be seeing one more push, but the markets are currently starting to price in that they can't sustain the policy as long as they can, or they say. Remember last year they said we were probably not going to hike at all, and now we have seen the fastest hike ever, and now they are saying that they need to continue doing that, but given that the markets or the economy is already going into contraction when it comes to PMI, it seems very likely that we are not going to sustain. So the markets are pricing this in already, bearish diff as well, resulting into a crash relatively soon, or at least falling off a cliff, and that's going to bring the markets up for Bitcoin. And then you have to look at what Bitcoin is currently doing. I'll put it off a log scale for now. We are down a lot. We are back to the numbers of where we started. We've got a theory of the Fed stopping the pausing, or at least pausing the hikes relatively soon. We've got a dollar showing weakness and continuing to do so. We've got intrinsic market events taking place, which is the FTX case, which it's recovering assets. We've got DCG Gemini, which is also recovering assets or is able to pay everyone. So the worst is getting priced in at this point, and we are still not making new lows after FTX collapsed. And FTX is a case that most of the markets knew since March to May. So the fall of the cliff is probably the last sellers that have panic that want to get out. So Bitcoin has a ton of catching up to do and a ton of upside for that in that case. And then you also have the case the Fed most likely pauses the hikes. That then we are going to get into bad economic data. But first we have got a case of the inflation dropping down. We've got economy going into contraction, and because inflation goes down and unemployment starts to rally, most likely the Fed has to. And then we get a fake rally in the period that they cut or at least pause the hikes. Because once they start to cut the hikes, we are already deep into a recession and markets are eager to fall off a cliff. So that leaves us by a window of approximately 3 to 6 months since the low, and we are already going sideways for approximately 2 months. So we still have around 4 months left to at least have some sort of rally like we have been seeing in 2019. Here we bottomed out in November 2018, topped out in June. So that's approximately 8 months, which would mean that we've got a rally going on until here. Possibly we're going to areas like 30 to 40k. In which we take out all these highs, go towards 38 and then reverse. That is most likely what I'm seeing right now. I'm seeing a first half in which we start to rally. Altcoins will do well too. And then the recession kicks in and we start to fall off a cliff and again, like we have been doing here, before the actual bull cycle of 2024 to 2026 starts to take place. Short update, I'll be going into depth way more in the coming week. Make sure to hit the like button, subscribe to this YouTube channel, and I'll see you again soon.